All right, let's talk about the market today, the Nasdaq 100. This is just going to kind of be I'm done with trading for today. I posted just one trade, one and done today, and I wanted to kind of just cover my bias of the market in a sense, directionally wise speaking. What did I see? And just why did I take the trade that I took? So this is kind of a freebie that I'm throwing out there. It was a nice long trade that I took. Even though we have sentiment, if you notice on the 60 range chart, moving to the downside, it did tap into where there was a demand zone at. The demand zone was a tested zone, but I talk about tested versus untested and high probability versus low probability. High probability zones will be those where we have an untested area, meaning at an area of supply or demand. Say, for example, in this case here, this is a tested area of demand, so it would be low probability, but that does not mean that the market still would not reject. But when we look for rejection, I'm not taking my trades or entering in the market right off of my higher base chart. I want to move down to a lower base chart, an entry chart, which is my 12 range chart, to look for a more precise entry point. And this is how you will prevent yourself from, not saying it's fail proof, but it will prevent you from taking as much drawdown or more drawdown. Okay, so the more that you can kind of use multi-chart confluence and then start scaling down or moving down to a lower chart, looking for a better entry at a key zone, meaning a higher base or higher time frame zone, that's how you're going to kind of minimize the drawdown. Now you should know that when it comes to trading, anything goes. We don't control the markets as retail traders, so they could choose to blow right through a zone if they want to. It just depends on an area. So the trades that I really like to take interest in are the ones that are more high probability speaking, where there's a gap back at a zone at an area of demand or supply, because that's what I trade. Excuse me. Is aggressive areas where the market has moved away from a zone or level. Okay. So in this case here, I took a long entry at an area of demand down here, even though we were breaking structure to the downside. So we got a shift in the market. And looking at my 60 range chart, all right, I don't trade time base or tick or volume. Don't even ask, please don't, because I simply have said that a million times. Why? I started off trading range charts, was introduced to them, and from that point going forward, it just became cleaner to the eye. I have looked at time-based charts. I just don't like the big wicks and all the wicking, all the just so many wicks at certain zones, whatever the case is. Things look a little bit more, I don't know, not say confusing, just I don't know. They're not as clean to the eye to me as range-based charts are. So whatever charts you work, trade with them. Whatever charts you're able to see things on better, trade using them. Okay, so just kind of giving a rundown of what I've seen the last few days. Of course, we've been moving to the downside here, and then the market turns around. Okay, it turns around, and we start breaking areas of structure above. So if we kind of zoom out on my higher base chart, okay, I use the 60 range. We can see where the market broke structure to the downside. Okay, you can see it where it came down here. Okay, and it started breaking through areas of major areas of structure to the downside. All right, so when it does that, we want to continue looking for opportunities to go short until the market proves us differently, meaning where it starts to break structure or re-break structure back to the upside, taking out key areas or key zones. In this case here, as you can see, when the market was making its move to the downside, significant pullback, broke lower here. Okay, you see that? Primarily when it broke above this area here at 172, we got a decent break of structure to the upside. So my mindset shift from being short to going long. So then you look for basically areas of demand or pull back to key areas of demand to trade from. And this is why the market bounced or rejected shortly after it opened. Well, not shortly after it opened up, but into the Asian session yesterday evening. You see this area right here? This was a demand zone resting right here. We had a break of structure above 172. It comes back. There's a demand zone resting right here. It's untested. There's an area where there's a gap at, so that's a high probability zone. And that's why when it got there, if you look at your lower time frame chart, you'll see, but you can even see it from here from the higher time frame chart, or when I speak of higher time frame, I'm not meaning time base. I mean just using that term loosely, but higher base chart, because it's a 60 range chart. For me, this is what I trade, not trade from, but what I mark my zones from. So this would have been a zone here that you could have marked. And when we got the rejection, you see it went back up to the upside because this was a untested high probability demand zone. But what I'm trying to say is that the market started moving to the upside here. All right. And then what did it do? It broke structure below here, below 286. Okay. So then we got to shift again to the down. We got to shift. We were long. Now we're going, now we're shifting to the downside, breaking structure. So now my mind looks for my thought process, my bias, looking for short opportunities to go short. Right. And this was into yesterday's trading session. So yesterday really, after probably about 11:40 or 12, which I don't think I was doing any trading after that. I would have been looking for opportunities to go short. Definitely pull back to key areas of supply at that point. Okay, so the market starts moving lower, as you can see, towards the close of the market, and it even started, moving lower into the overnight hours, as you can see. So this morning when I woke up, I saw that we were, bears. Okay, that's my sentiment. That was the bias I was going off of. But I did see that we were pulling back to this area of demand resting below. Even though we are shifting or moving to the downside, that does not mean that you can't look for an opportunity to go long if the market is moving into a key area or nice area of demand. All right. So I saw that this morning on my 60 range. Yes, this zone I mentioned. Let me take a look, blow it up. That's why I had this arrow right here, because someone asked me, hey, people are, I don't know, trade differently. I'll say that. Everybody trades differently. So whatever works for you, stick with that. You can't mix and match things up. You have to stick with one thing. And so if you don't see how somebody else is trading, you don't understand, then you don't understand what they're looking at. So maybe because you're looking at something in a different manner or a different light. So, whatever you were taught or whatever you educate yourself on, and you may not understand what 2 or 3 other people are doing because you don't understand the way that they're trading, because you are focused on what you're looking for. So please, so many people do that all the time. I don't see what you're looking at. This is what I saw. Yeah, because maybe you are trading different charts. Okay, so range charts aren't going to mirror up to or match up to be on time-based charts and things like that. I mean, you have to be able to see from someone else's eye. Trade what you see has always been the thing that I have heard, and other people say all the time. Trade what you see is true. Whatever you were educated on or and consistent and profitable in doing, stick with that. And that's what I do. I trade what I see. What makes sense to me. Okay, just because someone else don't see it, don't understand it, I don't care. It works for me, so this is what I trade. So anyways, getting back to what I'm talking about here, this was a tested area of demand right here. So it's low probability, even though we're moving, to the downside. So when I saw that, I just moved over to my lower time frame chart. I said, okay, I'll give it a shot if we get rejection at the zone, meaning confirmation and rejection. I'm just not taking the trade off of my 60 range. I'm moving down to a lower time frame. So we'll move over to the lower time frame. I'll show you that, and then we'll take a look at the trade right quick. That I actually took. So this area right here, okay, I'm just gonna do this for all sake and purposes. Okay, this is the area. That's that higher base demand zone from the 60 range chart. All I'm doing from this point here is just looking for basically a breaker structure to the upside, meaning where the market has created a demand zone. Okay, that's all I'm looking for. There's a breaker structure, aggressive buying, moving to the upside, showing me that there's still interest for the market to do what? To go, wanting to go up. Okay, so I saw the market coming to the zone, pushed up, broke a slight area structure here, okay, to the upside. So that was one, told me that, okay, we possibly still want to move to the upside. Then it created a demand zone as it made this push right here to the upside. We got aggressive buying. Okay, all these green candles, aggressive buying coming out of this swing right here. So when the market came back to that area, I'll look at this little zipper right here. So I marked this up right here on in my mind, I did, but right here, and I said, okay, the market comes to this area here where we had this aggressive buying to the upside out of this swing, after slightly breaking this area structure, then I'm going to look for a long position. What I do once the market taps into now my lower base 12 range entry chart, and there's a demand zone there. So we mark demand off of the higher time frame or higher base chart, demand zone off of the lower base chart. When it gets there, all I'm looking for is a break and close of a candle above the last bearish down candle. We get the break there at 18,094. You can go long. Now, I got in late because of the fact is, I think I didn't get into like 110 or somewhere around there. For one, I wasn't sitting in front of the chart right then and there. And by the time I was in front of my chart, I had to find, how can I get into a trade basically? So, because I saw it making its move back to the upside, and I saw what it was going to try to test, and that was going to be this area of resistance resting out here. Okay, resistance. Now there is an area of supply resting, or was an area of supply. It still is an area of supply resting up here. Okay, this is untested. There's an area right here as well at 180, but it's already been tested, so it's low probability to me. I'm not saying the market can't react there or reject that area, but just be mindful that, we could break structure up to the upside. And so then, you can kind of, your mind was, me, I start to look for maybe, I would shift from shorts to longs, whatever the case is, even though we have this bearish sentiment right here. But anyways, there is areas of supply resting above. There's an area of supply resting right here at 135 as well. I just threw that, 136. I threw that out there just on the Discord just a short while ago. So I put it on there. I'm just going to see what it does when it gets there. I'm not saying I'm going to trade it immediately when it gets there. It's going to have to prove that it wants to reject this area. But right now, yes, we are having bearish sentiment to the downside. But getting back to what I was saying, so I look for the market to, I try to find a way to get into the trade. But this was the opportunity right here at 18,094. And excuse me. And as you can see, what it did, it just ran up to the upside, and it ran all the way back up to where I basically had my initial TP at, I think it was like at 1046, something like that. I was wanting to take it back up to this area where there was resistance at, because I knew it could probably bounce or reject that area. Okay, because this was a break of structure to the downside here. Okay, so anyways, that's why I took that trade there. We'll jump over into the trade right now. I'm just going to show you a quick clip of that. And I closed out, I believe, at like 145, 1 point away or 1.5 points away from my TP, but because we were getting closer to the market opening, the 9:30 session. So here's a trade. Actually, I got it. Yeah, 110 is where I got in at. Sorry about that, guys. And I moved my stop up some to kind of lock in profit, But I just knew you have to understand and be able to, just through experience, know where this thing is going to go to when it rejects off of an area of definitely a decent area of supply or demand. Whether it's tested or untested. I mean, again, it can reject a tested area where it's already tested that zone at prior to. It can test it again and reject that area because they still may have orders they want to. What am I trying to say here? Want to fill. Okay, so it goes up there. Let's see. And I take out at 145. So I took out because we got closer to, like I said, the market opening. And again, I posted it over on our Discord community, that trade. That's pretty much what I do when I take trades. Not all my trades, because some of them I don't, I don't get to the recorder and click it fast enough. But anyways, I try to post as many as I can. But there, that's the purpose of why the Discord community was one of the purposes why the Discord community was created, was to allow people a space to where they could share their trades and discuss them with community, within the community. I trade supply and demand, but that doesn't mean you have to trade supply and demand. As long as you trade at the future markets and you're whether it's the currencies, commodities, it could be the financials, whatever it is, and you trade futures, you can come over and join us. There's a Discord link down below. But most of us do trade the indices, I will say that, and a lot of us do post our trades over there or share our trades. And so, anyways, this was just my discussion of the trade that I took today. Just one and done. I think I ended up picking up like 30 points on that trade. On 2 contracts. So that's enough for me. I don't need a crazy amount. It's not about, my thing is if I could take one good solid trade and be done versus taking, 3, 4, or 5, that's good. Okay. So I said at the beginning of the year, I'm still scalping because it is considered still scalping. I'm not swinging or position trading. I'm just saying that I'm looking to to maximize more profit by allowing, more runners, I guess, in a sense, allowing my trades to run more. So I can just primarily be done with one or 2 trades, and that's it for the day. The less time that you spend in the markets on the charts trading when the market is open, the more consistent you're going to be, the more profitable you're going to be. The more trades you take, the more risk you're going to put on, and possibly taking a failed trade to where you can either be in drawdown or possibly even, you know, blow a significant amount of money. So I talk about that like yesterday, and, you know, a how-to video for beginners who want to start off into trading futures. Please watch that. A lot of great information. I'll put that video here as an end cap at the end of this video. It is definitely a video you're going to want to watch. It's pretty lengthy though, but it covers a lot of valuable, good information to anyone out there watching this video right now who's a beginner trader and really wanting to start off. You definitely probably want to watch that, because I cover the highlights of, you know, what it really takes, or just kind of the areas discussing and answering some of the probably the top questions that most people who are interested in getting into trade futures, I answer those questions. So, but that's all I have for you guys today. I am keeping my eye on this supply zone here. That I have marked up, excuse me. But if you're interested in joining the Discord, you can find the link down in the description portion of the video. Click on it, invite yourself in. It's free of charge. Also, if you're not a current subscriber, please take the time to go ahead and sub by clicking on the sub button. And make sure to turn on all your post notifications if you have not already done so. Last but not least, please drop a like on the video if you found interest and value in the content today. Again, the Discord link is down in the description portion of the video, as well as you can find the link if you're interested in becoming an elite member. It's in the Discord, excuse me, down in, not in the Discord. It's down in the description portion of the video. Right below the Discord link, you'll see a link that says become an elite member. What you receive there for anyone, first off, you're supporting me as a content creator. Secondly, you receive the trade breakdowns where I go into detail as if you're sitting in front of me or virtually somewhere. I'm discussing the breakdown full on about trades I've taken, why I took them, you know, took those trades, okay, to inclusion with talking about stop losses and TPs and my whole thought process behind each trade, okay. Also, you receive the video playlist, which is a hand-selected list of videos that I've pulled off the channel here, because there's like 760 videos, something like that. And you may think I'm like, wow, he's crazy creating all those videos. No, I'm doing that for you guys. It's purposely done because I want to see people become profitable and successful. I really mean that when I say it, because trading can be, it's the hardest thing I've ever done. But once you know how to do it, it becomes easier in time. There are certain elements that just kind of, you know, will stick with you when you're into a trade, say from one fear. But the more you start to trade, the better you get. Any type of little issue you may have starts to diminish slowly. It never goes away, but you know, you can manage it, I say, okay? But I appreciate everyone tuning in. I'll see you in the next one. Take care. But again, yeah, if you're interested in becoming an elite member, I probably didn't say, the amount is $6.99. You support me as a content creator, but you get back those perks and rewards, like I said, the trade breakdowns and the video playlist, the emojis, the badges, the priority reply to comments. It's just, it's a tier-based program that YouTube has created that allows loyal supporters of, you know, or members of people's channels or subscribers to basically support the efforts of what a content creator is trying to do. So thank you for everyone that is a part of that program or community. Thank you for doing so, and I really appreciate you supporting me. Thanks.